Okay, this is the comprehensive problem. Now we discuss unit product cost under absorption costing, variable costing, and income statement under variable and absorption costing. The company is Maxwell. Manufactures and sell a single product. There is only one product. They are not selling more than one product. They are selling only one product, single product. The following costs were incurred during the company first year of operation. Okay, variable cost per unit, manufacturing, direct material, direct labor, variable manufacturing, and variable selling and admin. Right? Okay, fixed cost per year, fixed manufacturing, fixed selling and admin. Right? During the year, the company produced 20,000 unit and sold 16,000 unit. The selling price of the company product is 50 per unit. Okay, see, we have fixed cost, fixed manufacturing cost, and fixed selling and admin cost, right? So we will convert it into per unit, right? Okay, before that, we calculate the ending units. So my units produced is 20,000, sold is 16,000, and my ending units is how I will calculate 20,000 minus 16,000, that is 4,000. So my ending unit is 4,000. Okay. Requirement: assume that the company uses absorption costing. Compute the unit product cost, prepare an income statement for the year, and in second, assume that the company uses variable costing. Compute the unit product cost and an income statement. Right? First, we will calculate the unit product cost under absorption costing. We know that we require direct material, labor, and variable manufacturing overhead. We will take these three values, right? And now we required the last value is fixed manufacturing overhead, and my fixed manufacturing overhead in total is 1,60,000, right? That is 1,60,000. So I write here 1,60,000 divided by total unit produced, and my unit produced is 20,000. So my per unit cost is 1,60,000 divided by 20,000, that is 8. So my unit product cost under absorption is 35, right? Okay, prepare the income statement. This is the second requirement. Okay, move towards the income statement. First element of the income statement, take sale, right? Sold unit 16,000, and per unit price is $50. Here mention selling price of the company is 50 per unit. Take shift $50, right? 50 per unit. Okay, so my total sale is 16,000 multiplied by 50. This is my sale. Okay, less how we prepare cost of goods sold. We subtract cost of goods sold from sales. My cost of goods sold, how I calculate? First, my beginning inventory is mentioned, that is 0, because there is no beginning inventories mentioned in this question. So my beginning inventory, I would take it as in 0, right? Add cost of goods manufactured. Add what? Cost of goods manufactured. Cost of goods manufactured, how I will calculate? First, manufactured unit 20,000, and the cost of per unit cost is 35. From where I got 35? There in the part A we calculate unit product cost, right? That is 35. So 20,000 multiplied by 35, that is equal to 7 lakh. Okay, add these two value, what we get? Goods available for sale. This is my goods available for sale, right? Less ending inventory. Less what? Ending inventory. And my ending units were 4,000 and my per unit cost is $35, right? $35. I missed 10. Okay, so calculate these two values. How? 4,000 multiplied by 35, I got 1,40,000. So what is my goods available for sale? 7 lakh minus 1,40,000. That is, this is my goods cost of goods sold, right? This is my cost of goods sold. Minus this value. Okay, this is my cost of goods sold. Calculate, right? Now less, okay, now what we will do? We will calculate gross margin. How we will calculate gross margin? Sales minus cost of goods sold, we got gross margin, right? 2,40,000. My gross margin is 2,40,000. Okay, less what? Operating expenses, right? Less operating expenses. So my operating expenses, we have two operating expense. One is fixed selling and admin, another is variable selling and admin, right? Fixed selling and admin and variable selling and admin expenses. Okay, that is in 5. Okay, $5 mean per unit cost, right? There is not the total cost, right? We have per unit cost. So how we will convert it to per unit to total? The sale unit is 16,000 and the per unit variable cost is 5. So what I will do, I will multiply these value, these into 5. 16,000 my sold out unit and my 5 is my per unit price. So my total variable selling and admin expenses is 80,000. Right, total operating expense. Total operating expenses become 1,810 plus 80, 190,000, right? So my total operating expenses 1,90,000. Now calculate income or loss. Net operating, it may be operating income or loss. It can be a income or loss, both, right? So take gross margin less all expenses operating, we got net operating income, and my net operating income is 50,000 in this case, right? So what we have done, we have prepared the income statement under absorption costing, right? Okay, now our second requirement is to compute the unit cost under variable costing. Okay, it's very easy. Material, labor and variable overhead. In variable costing, we don't consider the fixed cost. We have already done in our theory portion in detail that why we not consider the fixed portion, we take only the variable portion of it. So we have taken the variable portion as well, that is my $27, right? Unit product cost. Okay, income statement. The second one thing is the income statement. Prepare income statement using variable costing. That is very easy. First take sale. I am taking these values, right? From here, first I will take sale. My sale is again 16,000 multiplied by 50. Both are same. In both conditions, the sales units are same, right? Okay, less, not cost of goods sold, variable cost of goods sold, right? First we will subtract variable cost of goods sold. And how variable cost of goods sold is prepared? First take beginning, again beginning is 0. Variable manufacturing cost, right here, add variable manufacturing cost. Variable manufacturing cost, the manufacture unit is 27, but the per unit price is the unit is 20,000 and per unit price is 27. So take this and calculate 20,000 multiplied by 27, right? Not 7, 27. Okay, so my variable manufacturing cost is this. So add these two values. One is this, second one is this. So I got goods available for sale. So less ending inventory. Ending in units by 4,000 and per unit cost is 27, because here we have calculated unit product cost under variable costing, right? We will use these value. So 4,000 multiplied by 27, that is equal to 1,08,000, right? So one value, my variable cost of goods sold. If I say this is my A, right? I am telling that this value is my A value, right? इसको कुछ और कर लेते हैं. A ऑलरेडी यूज हो चुका है. Capital A, right? अच्छा, this is my variable cost of goods sold. Variable cost of goods sold. How I calculate variable cost of goods sold? Goods available for sale minus ending. This is my variable cost of goods sold, right? This is my variable cost of goods sold. Okay, now we will take variable selling and admin, right? First we will consider all variable costs, right? So now I will take my second variable cost, that is my variable selling and admin. My variable selling and admin, okay, again the company sold 16,000 units and the per unit selling price is $5 variable selling and admin, so take 5 $5, right? Okay, so my variable selling and admin becomes 16,000 multiplied by 5, which is 80,000, right? Okay, see how we prepare the income statement in variable costing. Sale less variable expenses. Here we have taken variable expenses as well, right? So we got contribution margin, right? We have done that in detail in CVP analysis, right? So again, I'm just for reminding you, I'm writing here the format, right? So here is my sale, here is my all variable expenses, the variable cost of goods sold and the variable selling and admin. So what I will do, I will deduct these two from my sale minus variable cost of goods sold minus variable selling and admin. So what I got, what is the name of this value? Contribution margin, right? So what is my contribution margin? 2,88,000 is my contribution margin. Clear? Okay, now less fixed expenses, right? फिर हम क्या करते हैं, लेस करते हैं कौन से expenses? All fixed expenses, because we are using the variable costing approach. So what we do, we segregate variable and fixed separately, right? We segregate variable and fixed. So first, in the first one, we have taken all variable expenses, and now we will take less fixed expenses. Okay. So what are my fixed expenses? Fixed, again, move on question. Fixed manufacturing overhead and fixed selling and admin. Take both value, these two value, fixed manufacturing and fixed selling and admin. So what I got, my total fixed expenses is, if I say this is my total fixed expenses, this is my total fixed expenses, that is 1,60,000 plus 110, 270, right? This is my total fixed expense. Okay, this is my total fixed expense. So after deducting fixed expense, what I got? I got net operating income, right? Net operating income, or it can be a loss as well. Net operating income, right? So what is my net operating income? Contribution minus total fixed expenses. My net operating income is 18,000, right? My net operating income and this income statement is 18,000, right? So I hope it is clear to you, right? Sale less variable expenses, all, then we got contribution margin less fixed expenses, then we got net operating income. Same format we have used in CVP analysis, right? Okay, I hope you understand.